Good afternoon, everybody. Welcome to the session. Our speaker, Albert, is in the room. We are ready for an on-time start at 12:30 p.m. Eastern Time. David Morgan's session is just ending, so just sit tight for a couple of minutes and we'll get started momentarily. Thanks for joining the session, everybody. Good afternoon, everybody. Thank you for joining the session. Our speaker, Albert, is in the room. We are ready for an on-time start at 12:30 p.m. Eastern. So we're just going to wait another minute or two for folks to continue to populate inside the Zoom room, and we will get started momentarily. Thanks again for joining. Good afternoon, everybody. Thank you for joining the session. A couple of bits of housekeeping. We get right into Albert's presentation. Number one, thank you all for joining these sessions, both virtually of the sessions we do and the face-to-face events. Please keep your feedback coming so we can get better and better for you. And secondly, during the presentation, if this is the first time you're watching a virtual show at Money Show, there's an interactive chat box to the right of the player where you're watching Albert's presentation. Send questions over. Time permitting, we'll get to a few at the end of his session. We're going to 1 p.m. Eastern Time, so it's a 30-minute session. But again, don't be shy. Please send over questions. And again, time permitting, we'll get to as many as we can live with Albert. With that said, it is my great pleasure to introduce to everybody Albert Liu, who is the founder of Luma Financial, a California-based investment advisory firm, and a co-founder of Rule Classroom, an online educational resource for natural resource investors. He is also the former CEO of Sprott Media. Mr. Liu is a sought-after speaker and MC at conferences across North America, including the Rule Symposium on Natural Resource Investing, the New Orleans Investment Conference, and Capitalism and Morality. Albert, it's great to have you back, sir. The floor is now yours.
Joe, thank you very much. Thank you, everyone, for joining us today. It's a pleasure to be here. It's a pleasure and an honor to be invited back to the Money Show. It's such a smooth and well-run operation, Joe. With this on-time start again, I'm going to suggest that maybe the Money Show look into running our nation's airports because you guys just do an absolutely fine job. Thank you for that introduction. I am the president of Luma Financial. As Joe said, we're a California-based financial advisor. While we do have clients in California, we do serve clients around the country as far as Austin, Texas, and Houston, Texas, and Boston, Massachusetts. So I'll get to maybe our services a little bit later. But for now, lumafinance.com is where you can find us. And we will try to get to some questions. If we run out of time, there is a contact page on that website where you can submit questions for me. And I promise you, I will respond as soon as possible with the answer if you do that. Okay, so let's get started. This is the obligatory standard financial advisor disclaimer, while we are here to offer financial advice and manage portfolios, it's not something I can do on a presentation like this where I don't know who I'm speaking to. So take the material here as just information, even though we will be talking about specific company names and whatnot toward the end of the presentation. We can't give financial advice, so these are not actual recommendations at this time. The title of the talk is How to Play the Megatrend in Gold. And I'm referring it specifically to a megatrend because I think this is different than other bull markets you'll see in other opportunities, commodities and tech stocks and whatnot. And I think it's even different than other run-ups we've had in gold because of the various factors weighing on the economy. So let's define megatrend first. And this definition actually comes, uh, as more and more of our information does, from AI. So what I've learned is you don't always know what the source of this information is, but I like this definition. So I've included it here. And it goes like this. A megatrend is a large-scale, long-term, transformative pattern or movement with global reach and significant impact on society, the economy, and the environment. These trends are not short-lived events, but rather slow evolving, interconnected forces that shape the future and influence decision-making for business, governments, and individuals. I believe this is absolutely spot on. A megatrend should be large. It should last. It should be long-term, and it should change something. And it shouldn't just be a local phenomenon. It should be a global phenomenon. And the change that comes as a result of the megatrend should be significant in many parts of our lives. Also, this is not something that's going to be short-lived, and it's something that is long and slow evolving. And anyone listening, if my clients are listening, they would tell you that I've been talking about this megatrend for a very long time. And it's certainly taken decades to get to this point. But here we are, and I think this is something that we all have to stand up and pay attention to. Now, other examples of megatrends, just as a point of reference, I would mention the digital revolution that started in the 90s. I was part of that as a engineering student and later as an engineer in the semiconductor industry. That was something that emerged in the 90s. And I think all of us would agree that it's fundamentally changed the way we do things at a government level, at a business level, and at an individual level. And this is not something that we can see reversing, right? The digital world is here. I mean, this conference is a perfect example. 20 years ago, we'd all be in a conference room somewhere. Yet today, we are, hundreds or thousands of miles apart, sitting in offices and homes, listening, and you're listening to my talk from Southern California. So that was a mega trend. What's going on in the climate? And I'm not talking about politics here. I'm just talking about, weather patterns, long-term weather patterns. And you see that in the discussion about sort of the northern ice regions melting and then opening up trade routes from Russia into the North America region. That seems to be happening, and that has global implications. Also, electrification. I had to say that word 3 times before we started so I wouldn't screw it up. That is also a megatrend. You see around the world, less so here, but obviously, it started here with Tesla. But around the world, you see a lot of electric vehicles being sold. And the big automakers sort of did not jump on this trend early enough. And you see them now scrambling to get on board. Why? Because this is a mega trend. This is not something that's going to go away. And I actually saw an extraordinary interview with the CEO of Ford, where he was saying, look, we have to really step up, or this will be the end of Ford. And he wasn't kidding. And they are doing so. He talked about the Skunk Works program they have here I think it's in California, where they're rapidly developing new battery technologies and whatnot for this revolution. And it's so secret and so isolated from Ford's normal operations that the CEO's badge will not even get him in the facility. So they're very, very serious about tackling this head on. I thought that was very interesting. Now, the megatrend in gold is actually a result of another megatrend, and that is the megatrend in the dollar, the de-dollarization megatrend. And what we're seeing now, just ever so slowly, but it's been evolving for a very long time, is the dollar slowly losing its position as the global store of value and apparatus of trade. And as a result of that, what we're seeing now is the reemergence of gold. This is a post from JP Morgan just last month, a couple months ago. De-dollarization. Is the dollar losing its dominance? And the conclusion, if you've been following the news, is absolutely. Now, reports that the dollar is dead and it's gone. I mean, these are exaggerated and mostly designed for effect to get your interest. Okay, the dollar is not dead, but it's absolutely losing its dominance. And what are the causes for this? Why is the world slowly moving away from the dollar? Well, to be fair, if you look back through history, the world always moves away from fiat government money. That is sort of the predetermined endpoint of any fiat paper money. Doesn't matter who the issuer is. It's always happened. But why in this case? Well, the same reasons. Lost purchasing power. The dollar, as we all know, is buying less and less these days. And if you're, a foreign nation, you're holding this in your treasury, that's not a good thing. That's not a good thing to store your wealth in something that's depreciating. Also, restrictions on foreign ownership of U.S. assets. One of the reasons to hold the dollar is so you could buy things from America. And if the government puts on restrictions about, for instance, owning mines, resource assets, ports, agriculture, like things that are all the things that you'd want to own here. If the government puts restrictions on those, then dollars are obviously not worth as much to you. Also, restrictions on trade. The other big reason to hold dollars is to buy stuff that America produces. And through sanctions and tariffs, if you're not able to do that, if you're not able to buy semiconductors, if you're not able to buy other things, weapons and whatnot, all the things that people buy, agricultural products and that, you have less incentive to hold dollars. The other risk, credit risk. We have pretty severe budget problems right now. Let's call them challenges. And I noticed that Brian London, my friend, is on the schedule after me, and he's someone who can tell you with great detail about these budgetary problems. Well, that creates credit risk because now the holder of the bonds is wondering if they're ever going to get paid back, and the holder of the dollars is wondering, is the U.S. government just going to print more and more dollars to pay back this debt? So that's credit risk. And then finally, I would mention political risk. That is the risk that the U.S. government might just seize your assets. And, Russia is an example of that. Through this war, they have deposits that they've not been able to access, and that's obviously a risk. Now, we've seen in the last couple of years, although BRICS is actually quite old, we've seen the BRICS nations getting together and attempting to circumvent these trade barriers that are made possible by the US dollar. Now, what they're doing now is they're just trading in their local currencies. So they're trading in yuan and rupees and whatnot, rubles. There is no multilateral currency standard, and there isn't really one on the immediate horizon. But you can envision that eventually something like that will emerge, only because these these bilateral trading arrangements, they do get around the dollar, but they're very inefficient in the sense that Russia trading with India, for example, in rupees. There's only so many rupees that Russia would want to accumulate for their oil and gas, and because there's just so many things that they buy from India. If they want to, buy products from even within the BRICS nations, if they want to buy products from Brazil, as an example, or China, the rupees are not very helpful. So ultimately, the world will move towards some multilateral currency standard. We just don't know what it is. But one would guess at this point that it's going to involve commodities for a couple reasons. One, commodity money is the most reliable money. It has been since sort of we started using money. It's always been commodity money. Commodity money is reliable in that way. If you look at the BRICS nations, these are to a large degree commodity nations. They're agricultural. They have energy, and then the other thing is you see nations around the world starting to accumulate gold once again. So the underlying megatrend here is a move away from the dollar as sort of the primary instrument of savings and trade, except for with the US, obviously. If you're going to trade with the US, you still need the dollar. So I don't see it going away completely. But as the primary instrument of savings, we are moving away from the dollar. And I'm talking about at the bank level, at the international level. And this is going to result in the megatrend of the remonetization of gold. We're going to go back to the way we did things before. And when I say remonetization, I'm not meaning to infer or imply that we're going to be walking around with gold coins in our pockets. No, this is this is not that. What I'm saying is that gold gets reintroduced into the monetary world, and it could be as a larger portion of reserve assets, which we are already seeing. It could be as a larger part of investor portfolios as a savings instrument, and that could be coming. And you see the price of gold even today. We hit another all-time high today with Powell's comments on the plans for interest rates and whatnot. So this is something that I think is in play. Okay, let's go through the history of how we got here. The dollar has a very good, very long run. If you go back to its inception in 1913, but what's happened is that the purchasing power of the dollar has just declined. Now, not monotonically, you see portions in time where the purchasing power actually went up for a while. That's called deflation, and that happened during the Great Depression. But since then, it's been pretty, monotonic in the sense that it just keeps going down. It doesn't really regain its purchasing power. And this is only to 2020. It just keeps going. And you see all around the economy, things getting more and more expensive, despite, increases in productivity on the part of the markets. Prices are still going up, which is a problem. Now, what is the cause of that? Well, the overwhelming cause is just increases in the supply of money. This is a chart of the money supply changing year over year. So how much money, how many US dollars were added as a percentage year over year. And you see almost all years it's positive. This goes back actually just to 1988. But almost every year you see that the money supply is growing. In some years, it grows quite rapidly. In other years, it grows not quite as much. And when there's a crisis, some type of market crisis, you see it grows quite a bit as the government comes in and implements bailout tactics. So this area here is during the QE era. This era here is during the dot-com era. And then over here, more recently, COVID-19 triggered a big increase in the money supply, and that debases the dollar. That's why it doesn't happen immediately, but that's why over time we end up paying more for goods and services because we're paying for all of these bailouts. Now, if you look at gold, on the other hand, this is the supply of gold in metric tons year over year. The supply of gold is increasing. It's increasing because people are working to explore and discover and develop and extract gold. And this is a very expensive, capital intensive process with a lot of risk. So it's not something you do without thinking. And it's hard work. And that's why you see that even though the supply of gold grows every year, uh, it's constrained, right? You don't have these giant increases in the gold supply, especially during those, for example, 2009, this is the financial crisis, COVID-19. It didn't change because A, it's hard work, and B, this is not the instrument the government uses to bail out banks and companies when things go wrong. So that's very good for us as gold investors because we can rest assured that while the gold supply will increase, it's not going to explode. And that's why things over time tend to be uh, more stable. Prices tend to be more stable when measured in gold. And there's an article that I'm pulling off from the Business Insider where they just go through and they look at various services over time. And rather than pricing them in dollars, if you just look at how many gold ounces or gold grams it took to purchase that service, you'd see that it actually hasn't changed that much. This is Yale tuition from 1900 to 2012. And you see, yeah, it went up and down. That was mostly due to market interventions on the price of gold, actually. Um, but more or less, it stayed the same from 1900 to 2012. It's quite amazing. Food. If you go to the grocery store, the food prices in dollars are through the roof. But if you look at this index measured in gold, the price of food has actually been declining. And this is something you don't see in a fiat currency economy. Look at fast food in dollars. The yellow is in 2014 prices at various fast food restaurants. 2024 is just last year. And you see the incredible increase in what it costs to eat, even at fast food restaurants. And here it says the a Wendy's burger combo nearly doubled between 2014 and 2024. If you listen to the earnings calls for companies like McDonald's, they say that even the lower end of their market segment is struggling to pay for fast food. So it's really quite sad that this is happening. Look at gas prices. Gas prices were, well over $4 in California, but look, priced in gold from 1995 to 2014 or 2013, it's actually gone down. And I can just keep going. Look at electrical bills. Again, I have the fortune of living in California. Got another increase this year to our power. But look, across the country, if measured in gold, electricity is going down. So this just keeps going on. The CNBC article just reflects on what I just said, that executives at McDonald's see this happening, that prices are too high, and they're really up against the wall because their costs are going up. And they feel like there's not much they can do. They're running specials and whatnot, trying to get people back in the doors, but they're really struggling because their costs are up. They have to pay more. Can you imagine if the price of a hamburger has doubled since 2014 and your wage has barely moved? That's going to cause a lot of trouble. And then finally, I like to throw this one up: surging coffee prices. Go to your local Starbucks and see how much coffee costs these days. I like to joke, I don't even need the coffee anymore because the price is such a shock. It's more effective than the caffeine at waking me up. Okay. And finally here, this is U.S. inflation from USA Today. And so it's kind of an interesting assortment of goods and services. I don't know how they compiled this list. For example, video discs and other media up 30% year over year. This is March 2024. That's a big increase. And then you have other things like drinks and motor vehicles, insurance, household repair. I think this is something that's really going to shock people, is how expensive it is to fix the things on your house. Because if you look at sort of the appraisal values for home insurance, you're going to be shocked because in oftentimes these appraisals are much higher than the market value of your house or what's appraised by the county, and that's because the replacement costs, the lumber and whatnot has gone up so much, and that's what they're insuring for. They're insuring for replacement cost, and that's not yet priced into markets. So where is all this heading? I think what we're going to see is pressure building and people moving gradually and then maybe not so gradually into gold investments. And not only that, you're going to see that the global community move to what's basically a new monetary order. As I mentioned earlier, central banks, they've been accumulating gold for several years now, and that's actually what's been driving the gold price. It's not individual investors or even institutions. It's actually central banks accumulating, and you see gold, the gold portion of central bank portfolios and their reserve assets rising quite rapidly. Now, Frank Giustra was just at the Precious Metals Summit in Colorado. And in an interview, he declared that we are, in fact, right now in an era of hard money. Now, I don't know if he's jumping the gun, but I suspect he's just looking at the trend and looking at where it's going and basically arriving at the conclusion that, look, no, it's already here. And what did he point to? He pointed to the fact that the Chinese yuan is convertible for gold now on the Shanghai Gold Exchange. So convertibility is a big thing. We used to have that at one time in our country. The US dollar was convertible into gold. I think a lot of people either don't know or have forgotten that. So there you have at least one country moving in that direction. I suspect others will move in that direction too. And if they do, whether they call it that or not, you basically have a de facto gold standard. We have vaulting facilities in Hong Kong opening up for physical delivery and with more to come. And so I think that's what Mr. Giustra is looking at, is that it looks like we're going to a de facto gold standard. Now, as I mentioned earlier, we don't know what the new monetary standard will be. We really don't. However, we know that BRICS and BRICS plus countries are significant holders of commodities, their national holdings of oil, of gas, of industrial metals, of precious metals, wheat, rice, soybeans. Those are the assets that you find in these BRICS nations. And like I said, everyone seems to be accumulating, or more and more countries are accumulating gold. And as we go in that direction, it may be tempting to maybe find an alternative, some sort of, quote, digital gold or some other sort of substitute. And I warn against that because you don't know how the substitute is going to perform if we indeed go in this direction. And I'll point to an experience that Japan had. This is in the 19th century. A lot of the world was on a silver standard back then, especially Asia. So China was certainly on a silver standard. Japan was on a silver standard. And what happened was when the West, the great powers in the West, pivoted from silver to gold, that created a massive shock in Japan as gold, the value of gold surged relative to silver. And that really hurt people over there because they were saving in silver, and all of a sudden, the demand for silver dropped off at the same time the demand for gold was rising. And Japan tried to peg their gold silver ratio constant, but all that resulted was foreigners were coming in with silver and buying gold on the cheap because silver was overinflated. So I caution any maybe act to try to find an alternative. I think it's best to go with a real thing. So with just a couple minutes left, let me tell you what we're doing in our firm. You have strategy and you have tactics. And the strategy is the overarching plan. How are we going to secure and grow our wealth, let's say over the next 10 years? Well, gold is in a megatrend. And the last time this happened, go back to 2000. This is the NYSE Gold Bugs Index. These are large unhedged gold producers. Well, that went up roughly 1,600% for the decade. So it's really not difficult to figure out. Our recommendation is invest in gold bullion for security, speculate in select gold equities if you want outsized returns. That's the overarching strategy. Now, if you want to talk about tactics, I'll pull from my partner at Rule Classroom, Rick Rule, who recently told me in an interview that he's actually a seller recently of the very, very small speculative gold companies. He says that, look, I've gotten too much performance in a very short period without enough news, which means progress on these companies. And basically, he's saying that the cart has gotten ahead of the horse on the really, really small companies, the exploration companies, the ones that are very risky. So he's exited, but he hasn't exited to cash. He says, I've not left money in cash. Mostly I've recycled my money into market beta. So basically, he's gotten out of the small, risky companies into the high quality, larger producers and streaming companies. And so, as far as tactics go, we're going to take our lead from Rick Rule and recommend the same. So, for the time being, we think it's best to stay in what we call beta investments. You can tell I rushed this slide. Those would be gold bullion and large producing companies like Agnico Eagle, and also streaming companies and royalty companies like Wheaton Precious Metals and Franco-Nevada. Now, if you're interested in a managed solution, I'd recommend you check out my website, lumafinance.com. We have a managed gold strategy managed by longtime money manager Adrian Day. If you're interested in a managed strategy that invests in precisely these types of companies. Unfortunately, I've taken all the time that they allotted for me. But like I said, I can take your questions on my website. So if you want to use that QR code or go to lumafinance.com, there is a contact button right here, and that brings up a form. You can type in your question there, or I'd be happy to have you email me at lumafinance.com or call me at this number. And it looks like I am right out of time. So thank you, everyone, for visiting. I look forward to hearing from you. And please enjoy my friend Brian London's presentation, which is going to get started just in a few minutes. Joe, thank you very much.
Albert, thank you very much. Fantastic presentation. We had a really good crowd in here for you today, so we very much appreciate you educating the audience. Folks, we want to thank you guys for joining the session here. Enjoy the rest of the sessions today and tomorrow. Albert will have a replay. If you go to the expert section on moneyshow.com, Albert's replay will be available up on there, if not later today, first thing in the morning, so you can watch this if you caught it late. But again, we want to thank everybody for joining. Albert, thank you for the education. We appreciate you at Money Show, and we wish you a good rest of your day, sir, and a good rest of your week to everybody, okay?
Thanks very much.
Thanks again, Albert. Take care.